Hello, everyone. I'm Travis Wallace, realtor with Jameson Sotheby's International Realty, and I'm joined by Andy Smith with A&M Mortgage. How are you, Andy?
Good. Thanks for having me, Travis.
Yeah, thanks for being here. So right now, a common thing being pushed about buying a home is that you're getting lower interest rate compared to years prior. And one of the great things about Andy's team is that they offer interest rate updates every week that I can then share with my network. And I've gotten some questions along the way, so we thought it would be a great idea to come together and really break down what exactly an interest rate is and the actual benefits of having a lower interest rate. So Andy, can you break down how the interest rate affects your monthly payments?
Definitely, yeah. So the interest rate is basically the charge that the bank will add in order to make some profit on the loan and therefore kind of return that into other loans to originate more mortgages. So with that, if you think about any kind of charge that you pay, obviously the more charge you pay, the higher your monthly payment's going to be. So the less the interest rate, the lower the interest rate, the lower your monthly payment's going to be. So if we think about kind of an amortization schedule, so generally a fixed rate mortgage is either 15 or 30 years, the payment that you make each month actually remains the same, but the balance within that changes. So when you start paying, you actually will pay slightly more interest up front and slightly less of your principal balance. And that rebalances every month throughout your mortgage. So the less or the lower the interest rate, the less interest you're paying, therefore the lower your monthly payment's going to be.
And Andy, can you walk us through the benefit of having a lower interest rate by comparing two different rates?
Absolutely. So I have put a little comparison together for you, Travis. So I compared 2011 with 2021. I took the same condo in the same building. Now, disclaimer, I did leave the taxes, insurance, and HOA the same to give a fairer comparison of the rate. But when we look at 2011, the average rate for 2011 was 4.45%. And taking that all into consideration with a 20% down payment, that was going to be $1,707 a month. Now, you and I both know some of those fees are obviously going to be less. Insurance was probably slightly cheaper. The HOA has probably increased. But to make the fair comparison, I kept them the same. So then if we look at today, average interest rates are definitely down in the low threes. I've taken 3.25. Same condo, same purchase price, $250,000, and your monthly payment is going to be $1,570. We're talking over, $100 saving. So as you can see, Travis, the low interest rates have definitely had a huge impact in monthly payment. So those people who maybe have a strict monthly budget that they want to stick to, they're definitely increasing their buying power by using the low interest rates that we have now to get on the market. So let's get them pre-approved and into their first place, right, Travis?
Right. Awesome. Thank you so much, Andy. And we know this is a complicated subject, so feel free to comment below or reach out directly to Andy or myself if you have any questions about what we discussed in this video or any questions about the real estate process in general.